Welcome back. Well, the markets have celebrated a new top, 11,761 on the Nifty. But to be fair, the Sensex already had that celebration and the Bank Nifty even earlier. So markets now surging because of the liquidity. Ahead in the next 24 hours is also going to be very important. The Reserve Bank of India will announce its monetary policy. The April policy is historically very important. Now, of course, all policies with a bi-monthly routine have made the April policy perhaps just one of the many. Nevertheless, an important policy because people are expecting that it could be more than just 125 bips rate cut. It could be an indication of more dovishness to come. Hitendra Dave, Head of Global Banking and Markets at HSBC India, joins us now. Good morning, Hitendra. Thank you very much. What's your base case tomorrow?
Yeah, morning, Lata. No, I think as a starting point, one reads the minutes of the previous meeting and you get a sense of where the concerns are more. I think my sense is, I think more and more of the MPC members saw growth or weakness in growth as the predominant problem in the economy as opposed to, let's say, inflationary worries. And I think while obviously one or two members still wanted to validate that this soft patch in inflation would continue, my guess is between Feb and now, if there has been further worsening, I mean, there appears to be further weakness in growth. So I think taking into account this factor, taking into account that, we are experiencing this situation for the first time in many, many years. We've generally assumed that growth is a given, that all we had to manage is either the fiscal deficit or the inflation, because growth was more or less a given, and that, we would achieve whatever we had to achieve as a country. But I think for the first time in many, many years, you're looking at high-frequency indicators and macro indicators, both suggesting that perhaps even the MPC will need to focus a lot more on what it can do to support growth as opposed to singularly focusing only on inflation management. Fortunately for us, inflation, not just the historical one, but at least for all projections over the next 12 months, appear to suggest that they can take a much more accommodative stance on the growth side without really seeming to be abandoning their inflation mandate.
So, Hitendra, hi, good morning. Tomorrow, what are you expecting? A 25 basis points cut, or is there a higher chance of a 50 basis points move as well?
What is your much more accommodative mean?
I think the MPC needs to recognize that most indicators of growth are not flashing the right color. Okay, and most indicators of inflation are either green or amber. So if that be the narrative, I think it is fair to say that I would certainly think MPC should pay much more emphasis on what they can do to support growth. Whether that's a rate cut, which is more than the consensus 25, but more importantly, I think they need to signal that they are worried about growth, and therefore this is not going to be a yet one more one and done rate cut cycle. I think there has to be a bit of context here also, if I can just share that I think, the last 2 years or 2 years and a bit, realized inflation is about 3.5, 3.6 thereabouts average. And the average policy rate has been, I think, where we are currently around between 6 quarter around there, let's say. Very clearly, I think if with the benefit of hindsight, if we knew at that point of time in January 2017 that the next 2 years and 2 months inflation will be 3.5, 3.6, I don't think policy rates would have been kept at the rates that they have been kept. Now, this is benefit of hindsight, so I'm sort of not getting into that. But the reality is that very clearly some of that has resulted in some of the growth slowdown that we are experiencing. I think if you're projecting next 12 months inflation at or about 4%, and growth trending not northwards but southwards, and most high-frequency indicators also suggesting. When was the last time we saw production growth in very low single-digit numbers for a number of items that we've just got used to? So I would repeat the point that, many of us have just grown up assuming that growth is a given, just manage the other things. I think it's the first time that given has to be re-looked at quite closely.
Actually, in the poll that we conducted, 73% of our poll respondents believe that the GDP forecast will be scaled lower. What is your own expectation of GDP, and do you think that the RBI may scale it lower?
Well, I would think so if all high-frequency indicators, all wider indicators, import of capital goods or private capex, etc., I think is indicating that there is a slowdown, then eventually growth forecasts have to, and even worryingly, even consumption indicators are indicating slowdown. So yes, I think if GDP growth forecast is lowered a notch here or there, I think that would be expected. But the wider question remains, I think not so much in my mind about whether it's a 25 basis points or 50, but I think it's time for RBI to say that we are shifting decisively away from neutral to an accommodative stance so that everyone can plan and prepare accordingly.
Okay, but Hitendra, the last rate cut didn't quite get passed on. We saw 5 bips here and a 5 bips there. Yes, the bond market responded, but not the corporate bond market. I mean, the distance from the 10-year bond yield to the best, HDFC, is still almost 100 basis points. So, therefore, do you think that will be addressed? I mean, to put it another way, can there be a CRR cut, for instance?
No, so again, I would go back. So once you are very clear that the growth needs support and that you want to be accommodative, then you look at everything that goes with that statement. A is, whether it's a 50 cut, 25 cut, or a cycle of cuts. B is, I think, again, this needs to be debated. For some reason, we have all come to believe that the only liquidity model that works in the country is that of a shortfall of about 0.5% to 1% of NDTL. That's all okay if you're in the tightening phase or even in the neutral phase. But if you have come to the conclusion that no, the economy, the main problem of the economy right now is growth as opposed to inflation, then why would you not go for a liquidity surplus situation? Then comes your question how to get there. Is it a CRR cut? Is it more of the FX? I think the FX swaps tool is obviously working very well. So what tool to generate that additional liquidity, mix of OMO, swaps or CRR, etc. is to be debated. And then if you leave enough liquidity in the system, and I think a lot of market participants have tried to have this conversation with policymakers, that liquidity has a way of influencing actions in ways which are possibly not adequately understood by everyone, that the moment you keep liquidity surplus for a length of time, then the transmission starts happening. The point you're making, Latha, obviously there was a macro issue around interest rates and all those things, but there was also issues in the credit markets by which not only the ones who were supposedly in bad shape, but even everyone else seems to have paid the price. But my guess is, liquidity has to do their job as much as interest rates, and therefore when I say the policymakers have to decide.
Yeah, that's what. So should I therefore read that you want the reverse repo to be the signaling rate? You want that much liquidity. Would that be your vote if you were in the MPC?
No. I think all I'm saying is have reverse repos every day, not the reverse repo which is 25 basis points below the policy rate, but let the daily overnight reverse repos which can be at 1 or 2 basis points below. So let the RBI broadly be in a liquidity draining mode as opposed to a liquidity injecting mode. The rate might still be just 4 or 5 basis points from each other, but eventually as the system works its way through surplus liquidity, it has ways and means of ensuring that the liquidity starts getting deployed, and therefore the transmission also starts becoming a lot more effective. I think tight liquidity and cutting rates don't really go too well together, I think.
Okay, so an accommodative stance, a rate cut tomorrow, and growth perhaps could be scaled down as well. What else, Hitendra? What would you watch out for in the statement? Any more color that you're looking at?
No, I think, being the April policy, as Latha mentioned, tends to have a lot of regulatory features around it. I think we've seen welcome developments on that part. There's a lot of effort on to import a lot of the markets that we have exported out over the last 5-10 years or so. So I think things of that nature. The developments of yesterday, I guess, the Supreme Court decision, that's obviously a very important issue. Given that the balance sheet cleanup exercise was using that circular quite significantly as to what the initial thoughts of RBI on that are, and plus yes, I mean I would want purely from a monetary policy perspective clarity that we are going to support growth. I think that would be the most important thing. I think obviously is on an incremental basis.
You would want to say that we are moving from neutral to surplus liquidity?
Yes. I mean, either say it or do it, whichever way. It doesn't, if the saying it causes problems because you want to withdraw or something. But certainly, I think the actions have to be such that there should be comfort with a 40-50,000 crore surplus or 0.5% NDTL surplus on a daily basis, and let it be drained out through daily overnight reverse repos. Okay,
just then one last time. Is it a 50 basis cut that you expect? I mean, the governor can force it with his casting vote.
Yeah. See, if we didn't have this event of an election 2 months or whatever, 1.5 months from now, and if we didn't have this, noise about what kind of budget we will see whenever when the actual budget for this FY is presented, that might have been given a close consideration. But I think from an MPC perspective, the moment you say we are accommodative, okay, then it's whether you get 15 one go or you get 25, 25, 25, that's a different matter. But I think if the next 12 months are going to be anything like the last 2 years, then our policy rates could go a little lower than where currently the projections are.
Okay, but I mean, would you not also worry? I mean, 1 point for the other side for the Hawks, Hitendra. Both parties are looking at such huge amounts of fiscal spend on the one hand, and today crude is at 70. Does not that merit some consideration?
No, of course. I'm saying the weakness in growth merits, factors all these things in. I mean, see, like I said, it's an uncertainty. None of us are very qualified. I'm certainly not qualified to talk about election promises versus the actual budgets and all that. So I guess that's the reason I would only caution that go accommodative, cut 25. But when you say accommodative, means the next will follow based on incoming developments, including the budget numbers and so on and so forth. Okay. As far as oil is concerned, I think it is offset by the currency a little bit, and I would sort of focus on that. But I'm very much in the worried about growth club rather than.
So if it is 25 and accommodative stance, where will the 10-year be after the policy? No,
I think if accommodative plus liquidity is what you're talking about, you can see yield slide down towards 7-ish eventually over the next few months or so. I think the borrowing numbers are large, but if there is the accommodative, and if there is enough talk about worries about growth, and if liquidity conditions are converted from deficit to surplus, I think eventually the carry models, carry books everywhere in the world will come in. So I know a lot of people are worried about this very large borrowing size and who will buy those. I'm not so fussed about that.
All right.
Okay, all right, Hitendra, thank you so much for joining us and giving us your expectations for tomorrow, and also talking about what could come out of the policy in terms of the growth being scaled down as well as repo rate.
No, I think those two, 25 basis and accommodative stance, of course, with growth also getting scaled down would be a very dovish combination. But yeah, 7 on the 10-year we have not seen in a very long time. If that happens, then clearly all these NBFC stocks and PSUs have a lot of room to run.
Okay, for now, the market hit that high of 11,761 and came off just a tad bit. It's still holding on to its gains, but it's off the record highs.